Hi everyone, if you've been watching my videos about Celsius Network, welcome back. If it's your first time, I hope you'll learn something new, find it interesting. So this one's all about the loan system of Celsius Network, um, basically the features of the loan, strategies and why you might get a loan and how you can use it to your benefit, um, and also a little bit of my own experience using these loans. So let's jump right in. Oh, and don't worry, I'll get a little bit of bank bashing in there as well. So what's going to be covered? Why you might consider getting a Celsius loan in the first place. The features of a Celsius loan, interest rates, type of collateral you can use, the type of loan that it is. The strategies that you might use the loans for, as there's many things you might be able to do with it, which you don't realise. Just a quick page on the $100 loan bonus and why that promotion is in place, and basically print screens of the step-by-step process of applying for a Celsius loan. Because I know a lot of people are a little bit too scared to actually click the button and find out what the process looks like. So I've got it all in here for you. And just before we get into the details, everything on this presentation that I'm giving you is based on my own experience and my opinions. It's not financial advice, it's for educational purposes only. So, if you go do something stupid and get yourself wrecked, it's not on me, it's on you. So, yes, education only. So, why you might want to consider getting a Celsius loan. So, you might just want to buy assets without using your own money. You might be overly exposed in crypto. You might be trying to save some cash outside of the crypto industry now in the fiat world. So you could use a loan to do that. You might just want to play around and play the market. Something I've done myself. Low risk, because you can take a small loan out to do this with. We can go through that. Maybe you want a house upgrade or a conservatory or car repairs, a tax bill. You can basically leverage your digital assets to get a loan, pay low interest, and pay the loan back when you're ready. Again, get crypto upfront. So rather than waiting 6 months to build up your savings and then buy a big chunk of crypto, you can just get a loan upfront of a value you want and buy crypto on the day. So if you think Bitcoin's going to pump next month, but you don't have the money you want to put in now, you can obviously get a loan. Stack sats, a little bit like playing the market. You might just want to get some money to try and play Bitcoin. Comes with risk, but you might stack your sats. But something I prefer to do is stack your CEL token. Another thing we'll briefly touch on is deferring tax and saving on income tax. Strategies to do that using the loans, which is completely legal. But I will actually do a separate presentation on crypto tax for UK users and basically all UK people who are within crypto, because there's quite a lot of things they might not realise. And then you might just want to do it to get a free $100 promotion for taking out a 6-month loan. I mean, if it's a freebie, why not? So the features of a Celsius loan. So the first thing you need to understand is that these are basically interest-only loans whereby you only pay the monthly interest off every month and not the actual loan itself. And then at the end of the term, you pay the loan back in full. So without getting too technical, your mortgage or loans you get from the bank, for example, you will always have a monthly cost to pay off a certain amount of the loan value and a certain amount of the interest. So with the Celsius loans, because they are collateralized, they're basically interest only. So if you get a loan for a year, you'll only pay off the interest each month, and then at the end of the year, you pay the loan back in full. So that's how the loan works with Celsius. Obviously, gives you benefits. You have that money for longer to do things with. And the interest paid on your loans over the year can be as low as 0.7% if paid in CEL token and if you have platinum status. If not, you can put down ×4 collateral for your loan and you'll only have to pay 1%. So I think on £1,000 loan, so $1,000 loan over 6 months, you only pay $5. Pretty good. So loan durations as well. So the first screen you see, you can actually get 6 to 3 months, but you can't actually keep scrolling down, I have since realised, and there's no limit to extending the duration, and there's no fees for doing that either. Another thing about the loans is you can pay it back in full at the end of term, or you can close it out early if you want to. Myself, if you make money and then you get the loan value back, it's probably best to just keep the loan value in the Celsius app and get some interest on it whilst you're waiting to pay it back. I mean, win-win. The application process is extremely easy. You just do it all in the app. I think it took me about 5 minutes, if that, just to go through, click all the buttons, check the details, check I was happy, and then within the hour I had the email documentation to keep for obviously proof that you've got the loan from Celsius, and the funds landed within the hour, and I was able to go do stuff with that money. So that's really good. And the interest, you've got options to either pay it back automatically or manually. What I find is if you've got enough digital assets in the wallet, if you just pay automatically every month, you don't need to worry about missing a payment, because if you're getting, say, $15-20 of interest paid weekly, then that's easily going to cover your $1 payment a month. So that's pretty good, assuming you've got enough digital assets earning yield. And then the other good thing as well is the collateral that you put down, you can have a reverse margin call once every 30 days. And basically, that means if you've bought CEL, or so you put a CEL collateral down, and next month the value of the CEL token is doubled, you can actually get your CEL collateral released. So if the lowest price point over a 10-day period was double what it was compared to when you put the collateral down, you'll basically be able to release 50% of your collateral. So it's pretty good. That means that as your collateral's appreciating, you can then take it back out and start getting interest on it as well, because you do not get interest on your collateral. It's locked away. And this obviously works the opposite way. So if your collateral, the value of it depreciates, there'll be a margin call where you need to add more collateral. So it works both ways, and the team will always work with you to get the best possible outcome. Another feature is the team themselves. Tal and the team work around the clock, and there's a rumour that Tal never sleeps. She's confirmed this as fact, but that would mean she's an alien, so I'm not sure I believe her. And to date, only a very small number of users have ever been liquidated, and Celsius actually had the lowest number of liquidations of all the customers in the pandemic crash compared to all competition, and they don't charge fees for liquidation. That's really important because all competitors charge fees. So collateral and interest. So basically, the way the interest works that you have to pay, if you put a if you want a $1,000 loan, take 25% example, you would have to put down $4,000 worth of digital assets in collateral to get the 1%. If it's the 3 times 33%, obviously you need to put times 3 down of the lending amount, or you can put times 2 down of the lending amount. So you can basically use any digital asset that Celsius have in their app as collateral, assuming you have those digital assets. So Bitcoin, Ethereum, Chainlink, XRP, CEL token, stablecoins, doesn't matter. So strategies for using Celsius loans. So this is my favourite one. If you've seen my Twitter, you'll see how much I was buzzing about this a few weeks ago when I tried it for the first time. So basically, stack that CEL or go long on CEL, which basically means you're going to take a loan, buy CEL token, and when it appreciates, take your money back out, and you'll have more tokens, more CEL tokens than you would have had if you were earning it off your collateral. But this comes with risks. So I have got a nice example to go through here, but just remember, taking loans out to buy more digital assets in the hope they're going to go up is high risk, and the token is pretty much settled at its all-time high, or at least near its all-time high, so it's extremely risky, or you might see it as extremely risky to do so, and it's definitely not advisable. So you could get wrecked, you could absolutely lose your money. So this is considered a high-risk strategy, unless you're daft like me, and I think it's low risk. So an example of how this works: if you take out a 1,000 stablecoin loan in USDC, you have to put, if you want the lowest 1% rate, you have to put ×4 collateral down. So we're putting down $4,000 collateral as CEL token. So we're going to use our CEL token as collateral, and we lock up 10,000 tokens because they're worth 40 cents each. Now, those 10,000 tokens would actually earn you approximately 300 CEL tokens in interest over 6 months. So I've rounded up the interest on CEL to 6% to make it easy, because you probably get that by the time it's compounded weekly. So for easy maths, over a year, the 10,000 tokens would actually get you would get you 600 tokens in interest paid to your account. So over a 6-month term, that's actually only going to be 300 tokens. So when you get this 1,000 USDC loan, you're going to go straight to the market and buy 2,500 CEL tokens at 40 cents. You've now got that amount of tokens ready, waiting for the value of it to appreciate. And let's just say 1 month later, the value of a CEL token has increased to 60 cents, which means it's an increase of 50%. So you're now holding $1,500 worth of CEL token. And so if you now sell $1,000 worth of those tokens to get your loan value back out, that would be 1,666 tokens. So to get your $1,000 loan value back out, you would sell 1,666 tokens, and then you can take that stablecoin, put it back in your Celsius app, ready to pay off the loan in full whenever you choose to. Now, the best part about this is, because it increased by 50%, that actually leaves you with 833 tokens, which is 533 more tokens than you would have got with your collateral. So, using that strategy, you've not only avoided interest income taxes if you're within the bracket for it, and a UK user, you've also more than doubled the amount of tokens you would have made from a standard interest. So you've got 833 now instead of 300, which is, that's like over 2.5 times more. So for me, I think this is great, but we're kind of in a bull market right now, so it's good. It's good when you're in a bull market. If you're in a bear market, you'd be an absolute idiot to try doing this. So be careful. Never put yourself at too much risk. This is just an example of how it can work, and has worked for myself. So this here is called the CEL Channel of Dreams, and after doing all of my own research on the token economics of a CEL token, how the interest mechanisms work on all different coins and sell on CEL, and this beautiful price chart provided by Crypto Flipping, which is one of the best guides for community stats on Twitter. So if you're interested in seeing more than just this material, go give the guy a follow and enjoy what he provides. It gives you a lot of really good information. So the CEL Channel of Dreams is basically if Celsius maintain their growth, maintain their sustainability and profitability, and the CEL flywheel continues to spin, it's basically not inevitable, but very high chances of the value of the token continually cycling and just getting higher, because we're only at about 60,000 active users right now, and in a year's time that could be a couple of 100,000. In 5 years' time it could be 1 million. So there's a lot of potential with this token, and all of this year from May to November, since the sell wheels really started spinning with enough momentum and finance behind it, we've seen time and time again that this is massively resistant to market movements against Bitcoin, and there's not very many speculators, so the value of the token is really driven by the mechanisms of the Celsius business model. So I'm a believer of this sell channel of dreams. I am a dreamer. I do believe that by July next year we will hopefully be around $5. We might be a little bit lower, but I do think we'll definitely be double where we are now. So for me, stacking the sell at the moment is one of my strategies, because I think we'll be somewhere better in a year's time. But of course, that is a lot of risk. So do not put yourself in a stupid position where you're overextended. This is for speculative purposes. This is what we believe. So another strategy for Celsius loans: get your crypto ahead of time. You want to get $1,000 worth of Bitcoin before the next big pump, but it's going to take you 6 months to save it. Leverage the assets you already have. Get a loan. Go buy the Bitcoin. You're in a secure job, so 6 months later you pay the loan back in full. Obviously, there's risks here. If you lose your job, you're not going to be able to pay your loan. However, there's no fees for extending your loan, and the interest payments will be about $1 a month. So the risk factor is really low because there's no fees. So if you're in a spot of bother, you can move that loan along until it comes good. So extending your loan, that brings us on to the next slide, another strategy. So kicking that can down the road. You can basically use collateralized loans if you've built up a big enough portfolio and kick the can down the road all the way to the grave, pretty much. Rest in peace, debt. So let's just say you're getting a conservatory on your house. You don't want to get a standard bank loan and pay it off every month. So you're going to leverage digital assets you have and take out a 10k loan, say for 3 years. And you put ×4 collateral down, and you're paying 1% interest a month, which is something like £8.33 for a conservatory a month. Not bad, is it? So basically, this is what rich people do, and all the rich kids in the world. They use their assets to get collateralized loans, and then they just don't pay them off, and they move it, and then when some more of the assets appreciate, they release it, and then they use that money to pay off the loan, and then it's just a nice cycle of that until they get to be about 80 years old. And when they're about to pop the clogs, it doesn't really matter anymore, because any loan which doesn't get paid off gets absorbed by the loan provider. So, yep, you can literally keep kicking that can down the road, extend the loan, duration free, because there's no fees. So, it's a pretty cool thing to do. Might not be for you, it's just another option, and you can take your debt all the way to the coffin. And if you think about it, Celsius aren't going to be bothered when you pop your clogs, because if you've gave them ×4 collateral, well, they're just going to keep that collateral and make money out of it. So it's a win for them, it's a win for you. Another strategy, this is one that I've looked into a bit deeper today, and it can get a bit more complex than what I've got here. So this will feature in more detail on another presentation that I'll do to help UK taxpayers. So basically, when you get interest on your crypto, whether it's with Celsius, Voyager, Crypto.com, cashback, all of these things are considered as an income, not capital gains tax, which is when you sell your crypto. So for any interest you receive from Celsius or any other provider, when it lands in your account, at that point in time, the market value is considered income, and then every week that all tops up, and eventually in the UK you'll surpass the £1,000 tax-free limit if you're making enough interest. And once you pass that tax-free limit, you then have to pay income tax. So depending on how much you already earn in your normal job, let's just say you earn 25k, then it's going to be in like 20% bracket. If you earn, think 33,000, it's going to be in the 30% tax bracket. then if you earn above 40 something thousand pounds, because it's topping up your wage, you'll be paying 40% tax. So that's, the higher up the scale you go, the more tax you're going to end up paying. So this is what you can actually do, is you can take a loan to pay that tax off, and then just keep deferring the loan. So it's actually not cost you anything. Because you've taken a loan, you still have all the assets in collateral, etc. So as they keep appreciating, you can just basically keep extending that and not have to ever pay that loan back, which was the tax bill. You only ever paying a little bit of interest. So that's like a way to do it. The other way benefit here as well is capital gains tax has a £12,000 tax-free limit. So if you take a loan out, you're locking up collateral, so you're not having to get interest on it, which means you're getting less income. Then if you go buy digital assets with it, or more sell token, etc., because it's a purchase, when you sell those assets, it's capital gains, so it's 20% as well. So you've got a high tax-free limit to play with. So this is like a little bit more of a complex technique, but it's definitely something. If you have a lot of interest income coming in every week and every month, which if any of you have quite a few sell tokens, 5 years from now, you could be having a lot of interest income. And so you might want to try and reduce how much interest income you actually get and try and capitalise on the capital gains side of it instead, because you've got a bit more tax-free room. So obviously this might not be viable for anyone, because obviously everybody has different earnings, but it can be a good technique for trying to reduce the amount of income you make, so you pay obviously less tax. So this will be in more depth on my next presentation too. So the risk of collateralized loans. You can lose your money and get absolutely wrecked. Self-explanatory. Speaking to a guy on Facebook yesterday, really good story. He said he actually got admitted to hospital. I shouldn't laugh. He got admitted to hospital because he was basically getting heart tremors. He was on the verge of having a panic attack, and it's basically just like, good story to remind and never to overextend yourself. So in the pandemic, the crash in March this year, he had a loan, and he basically maxed out his collateral with Bitcoin. So he took a loan out and he put all of his Bitcoin down for this loan. So he had very little room to add any more collateral if it went south. What happened? Bitcoin dropped from something like $10,000 to $3,000, and he was basically obviously hit margin call after margin call all the way down, and he was trying to drag Bitcoin and crypto from everywhere he had it to try and add it as collateral. And he said it was very stressful. Obviously, he was getting heart tremors, and he thought he was going to lose all of his money. But luckily, Tal and the team helped them as much as they could, and they managed to avoid it. And obviously, that's really good news. But yeah, you don't want to be in that position ever. So that risk is a real risk, and it does exist. So never ever overextend yourself. So Celsius or the banks for a loan. So Celsius is the modern ways of saving and lending, doing good before doing well, giving you interest rates of up to 15%, whereas the banks are considering taking money out of your savings. So the banks basically drain society's savings to make money for themselves and the shareholders. They're just driven by pure greed. So let's do a few quick comparisons. So the first one, you don't need a credit check to get a loan with Celsius, because it doesn't matter who you are or where you're from. If you can provide legal digital assets as collateral, you can get a loan. The banks requires a credit check, so you can actually get declined if your house has been blacklisted, even if you didn't live there before, and somebody else caused that blacklist. So maybe you had a weird transaction one time where you've defaulted on a payment and the bank don't like it and they can turn you down for a loan. Not great. 2. So Celsius, you can take a loan of any size as long as you can support it with collateral. With the banks, the loan size is based on what you earn. So they might be able to turn you down for that really expensive house you want, or car, etc. Point 3, so Celsius, they provide really quick interest-only loans, and they're the only ones that they provide. So this means you don't have to worry about big monthly payments. That's a big thumbs up, especially in today's world where everybody's got just about everything on tick and everybody has a lot of monthly payments already. But with the bank, it's extremely difficult to get small interest only loans. I had a look for some earlier this year and I couldn't find any. I was searching for a good week. You have to pay them and pay off that loan every month. So unless it's a mortgage and you get a good interest only mortgage deal, you can't get it for small interest loans. That's not ideal. And another benefit of Celsius, you can apply for the loan and get it on the same day. The bank can take weeks, especially if it's a different bank or a different provider. If it's the bank you're with, I believe you can, like Santander, get a loan the same day using their app. But obviously, if you're going to a different bank for a better rate, you're going to get the paperwork, have to sign it, send it off, etc. And finally, Celsius want you to have a good experience and basically really good user experience with their app, and they're always going to work with you to have the best possible outcome. So Celsius are all about trying to make sure everybody does well whilst using their app and their system. So for the banks, they don't actually care if you don't pay that loan back. Like they do, but they don't. They actually want you to miss a payment so they can just slap you with another charge or go into overdraft so they can slap you with a charge. So as long as you can keep paying that loan back but sometimes miss a payment, they're happy to just slap, charge please. Not ideal. So let's not go too hard on the banks. I mean, although they were largely responsible for the 2008 financial crash and the vast majority of fraudsters got off absolutely scotch-free, we still do need banks to do our mortgages. And I firmly believe that in the future, now that Kraken, for example, are a crypto and fiat bank, the first one in the world, I do believe that now that we have these saving systems in place with Celsius, it's only a matter of time till in the future the final product that the banks offer that the crypto industry currently can't is mortgages. And when a mortgage can then be provided by a company within the crypto space, the traditional bank will be toppled. And I mean, that's starting to be toppled now. The traditional banks which aren't utilising the blockchain technologies are so far behind the times that 5-10 years from now, they're really going to be struggling, especially when people start to wake up and realise they can get good rates with Celsius instead of 0% with the bank. So the $100 loan bonus, why would Celsius give you $100? So it's obviously promotional. They make money off loans. So if you take a $1,000 loan, you'll get rewarded with $100 as a promotion. Why? Locking down collateral reduces the amount of interest payments that Celsius have to make. So this obviously makes them more profit because they have to buy back less CEL per week to pay interest. This collateral can then be used by Celsius to provide more loans. So that helps profits. Remember, 80% of profits come back to the users. So it's in the best interest of everybody. So the collateral basically can be used to make money. $100 bonus to the user and borrower, so new borrowers only. And it's also going to give you experience using the collateralized loan. It'll give you the option to use any of the strategies provided. It might be to go long and sell. It might be to buy some more Bitcoin. It might be to pay a credit card bill. Whatever it is, it's giving you an option to try that at a relatively low risk. There's always risk. And that is why the promotional offer is available. Because most people hear collateralized loans and they shit themselves. And the first thing they think is, oh shit, payday loans. No, it's not like that. I can say that from personal experience. I found it really, really good and really beneficial for myself. So the next part, basically just run through the loan application process really quickly, just to show you all of the different screens you'll see, because you might not want to click on it just in case you accidentally do something. I know it's that little bit of like fear in the brain. It certainly was in mine before I did it. And it took me a long time to understand why I would take a collateralized loan. And it wasn't until I did it I realised the utility of like what it can do, which is why I'm doing this presentation, to help educate people on what you can do with these loans. So screen 1, there's a little button called borrow. Just click on that. That'll bring you, and then press apply for loan. I missed that print screen, I am sorry. And then click on borrow stablecoins, because I'm borrowing USDC. I don't have a dollars bank account. And anyway, I can go buy sell tokens with USDC, so it's suitable for me. So basically, borrow stablecoins, the first option is to drop down here. You just pick the one you want, for me USDC, but you want to lend $2,000 worth. And then the very next page, when you click choose collateral, it will bring up all of your holdings that you can use for collateral. I've blacked out my sell holdings. I do have a lot of tokens, embarrassingly so. I obviously picked Celsius. You can obviously pick Bitcoin, Ethereum, Chainlink, whatever you're holding, XRP. Once you've picked your collateral option, you can choose your interest rate. I chose the 1% APR because I'm going to put down ×4 collateral, and it actually automatically calculates here how much tokens of the type's going to get locked down. Forgot to black that bit out, but yeah, for your info. Once you've picked your interest rate, it'll bring you to the next one, and it's basically going to ask you the term of loan. For this particular one, I chose 12 months because I'm fancying that Bitcoin's gonna pump a lot by the end of next year. Pretty confident on that, so yeah, screw it. I'll take a risk. The next one, click on continue, and it basically brings up some of the terms and conditions at a high level, like a summary page. It tells you how long it's for, what you have to pay every month, what the total payment is, and the number of payments. And then it'll tell you down here, which is a really important aspect of the loan, is the margin call. So whilst you've got the loan out, if sell dropped to 24 cents, which I hope it never does, but if it did, at that point in time, there'll be a margin call for me to add more collateral to the loan to maintain the loan and keep it live. And below the sell margin call, there's also a liquidation point. I think it was maybe 18 cents. Can't remember. So obviously, as long as you add more collateral at the margin point, you obviously don't risk liquidation. Is there liquidation 19 cents? Yeah, I was one off. And you go for the next one, and you get pending loan. So basically, it's now with Tal and the team to approve and send you the funds to your wallet. So you just got to hold tight. And if you're getting impatient, you can tweet Tal on Twitter if it's taking too long. She's like she said, she's available 24/7. So don't be shy. Just don't put your foot in it like I did. She was on holiday celebrating with her family, and here's me. Howie Tal, approve my loan, please. Thankfully, she took it nicely and just forwarded the request onto her team, and it got done within the hour. Hope she likes me. So thanks for watching. I hope you learned something. I hope the strategies were interesting, and I've got 2 more videos coming up. One of them will be in depth how Celsius interest is calculated and when you may or may not want to earn and sell, because there's kind of benefits if you want to manage it, and how it works for stablecoins, Bitcoin, sell and sell interest, how it drives the sell wheel. That'll be one of them. Then the second one will be mainly for UK crypto users, and some background that I've learned about how the UK treat tax for income tax with crypto and capital gains. So it should be quite interesting. Hopefully educate people that they might need to go get advice on tax from a professional, because obviously I'm not one. So thank you.